Okay, to start the bank reconciliation, we can go to the home page. Here's the home page, and click on Reconcile. Or we could go to Banking and then click on Reconcile. Here's the window that opens. The account we want to reconcile is the Bank of Tomorrow checking account. We know that because if we look at the bank statement, it says the Bank of Tomorrow. Next, we need to fill in the ending balance. The ending balance box is asking for the ending balance from the bank statement. It is not asking for the ending balance in QuickBooks because QuickBooks already knows that number. So let's go back to the bank statement. And according to the bank statement, the ending balance is $3,070. So we will enter that in the ending balance box. Then QuickBooks is asking for a service charge, if any. Go back to the bank statement. So we have to scan the bank statement for a possible service charge. So we're going to look in the charges sections, and we see service charges of $10 on February 28th. The year is 2010. You can tell that from up here. So I'm going to go back here and enter the $10 service charge. I'm just going to tab to the date box and then type 2/28/10, hit tab again, and it fills in the correct date for me. Now we need to choose the account. The account we choose is going to be an expense account that's going to be charged with the $10 service charge. Now this company has chosen to use an expense account called Bank Service Charges. By entering the $10 service charge here, QuickBooks will debit the expense account and then credit the checking account. This happens behind the scenes. You could even run a journal report when we are done with the bank reconciliation, and you would find that in the journal. If there was no service charge, we would leave it at 0, and then QuickBooks would not enter any transaction, in which case the date would be ignored. Now QuickBooks is asking for an interest earned amount, if any. Let's go back to the bank statement, and we find in the deposit section a deposit of $15 for interest, and that's also on February 28th. So we enter 15 bucks. I'm going to tab over, hit 2/28/10, tab again. Now we need to choose a revenue account for the interest. And this company has an interest revenue account. We will choose that. Notice it's an other income account. Remember, QuickBooks does not call revenue accounts revenue. It calls them income. And this one happens to be an other income, which means it's minor. Then we can click on Continue. And in the next video, we'll start analyzing the bank statement line by line.